Some housing markets are breaking and prices are falling fast, such as Dallas, Texas, where home prices are now down 5% year over year. Unfortunately, most of the US and many markets are still way too high when it comes to home prices. For example, in Cleveland, Ohio, home prices are now near record highs at $250,000. Their home prices are up 7.7% year over year. And so it really depends on where you live in the US. That's going to determine what's happening in your local housing market. But make no mistake, most markets are still up year over year, unfortunately. Prices are still sky high. People are priced out of the housing market, even in the areas it seems like where prices are falling. And this is all happening while we have record low demand in the housing market. So buyers, for the most part, have checked out. But in some markets, prices are falling. And again, in a lot of markets, prices are still going up. But the Redfin data will tell us why. They will tell us the story with this new data update that they put out last night. Welcome to the Redfin Live housing market update on the Housing Nerd channel. My name is Jason Ferrier. I am a realtor. I'm an investor in Central Ohio, and I am going to be your guide this afternoon, for the crazy housing market. So how we do this is I'm going to look at the national data first. I'm not even going to look at the article from Redfin. I don't even think it's out yet. But then I'm going to dive into the metros that you want me to look at. This is all about you today. This is all about you. I want to help you understand your local market. Now, I have charts. I also have maps that we can go down to the zip code level if you want to. But the latest data is with the charts in Redfin. And yeah, let's get started. Please put your comments or put your metro or your county or your zip code in the comments, and I will do my best to get to it, depending on how many I get. But yeah, this is all about the housing market update today. So the other thing you could do for me to support my channel is hit the like button and share the video, get some more people involved, and tell us what's happening in your housing market. I'd really like to know. The more interaction, the more YouTube will spread this thing around, get more people involved, and we can dissect more housing markets. So, all right, let's get started. I'm going to look at this national data first, then we'll jump into your metros. Yeah, Cleveland's just crazy, right? Yeah, prices just keep going up. And this is real data, folks. Like, I'm not, I didn't look at a lot of this before the live. I looked at the national stuff, but I didn't look at a lot of metros. So we'll see what we see. But look at new listings. So we're going to start with demand. I'm sorry, start with supply. Shows how awake I am, right? It's 11 a.m. You think I'd be awake. But we're going to start with supply, because supply drives prices. It just does. And so if you look at new listings, let me go to all the metros, all the areas here. You can see new listings are sluggish like a wet sponge. 3.4% up year over year. That means basically people are not listing their homes like we would want them to. You need more homes listed. You need more sellers listing homes to drive inventory up to lower prices. One of the crazy things to think about is that 81,000 listings, new listings, hit the market. And this is over the last week. I'm sorry, this is the week from, if you look at from how they do this, is October 13th to November 9th. They look at those 4 weeks, and then they average those 4 weeks out to what a week would be. So they say, all right, weekly, what does that equal? So that's how they're looking at this data. So they dump the latest MLS data in. They dump some public record data in, I believe, as well. And then they give you the best data possible for us to use. And so you can see here that over the last week, we've only added 81,265 new listings. And what does that mean? Well, it's not good. We need a lot more people listing their homes. During the leading up to the worst years of the housing market, we had 250,000, sometimes 400,000 listings hitting the market weekly. 250,000 listings hitting the market. Now we're at 81,000. So this is just not moving the direction that we need it to add a lot of inventory. Now, let's look at active inventory and see how much we actually have. And by the way, you can come to this Redfin data center anytime you want and look at all this stuff. Just, it's all free. When I show you these charts, these are free. When I show you maps from Resi Club Terminal, that is a subscription. You have to pay for that. But this info is free. So if you look at active inventory, look at this thing. I mean, this is like, it's just shocking how this is falling. 6.27% up year over year, but look at that number just fall. I mean, it is possible that by the end of the year, I don't think necessarily this will happen, but it could happen where where active inventory falls under 2024. I mean, that would be not good. Not good at all. And we have 1,189,000 listings. What's crazy about this is that during the worst years of the housing market, when we had 250,000 listings hitting the market as new listings every week, folks, we had nearly 4 million homes on the market. 4 million. I mean, think about you look at this chart and it looks ominous because it's like, wow, look at that line. It's way above. It's, it's elevated. But if you were to come out from a historical context, our inventory is woefully low nationwide. Now, we'll get to the metros because it depends on where you live, right? And a lot of areas are seeing a lot more inventory for sale than they have in the last decade. But some areas, or most areas rather, are seeing inventory on the struggle bus. So it's just an inventory game, and we're just not winning right now. Not winning like we need to see massive price drops nationwide. And if you're in the Northeast or the Midwest, you know exactly what I'm talking about. I'm sure I saw a comment a couple days ago on another YouTube channel where somebody in the Northeast was like, man, there's nothing for sale here and prices are insanely high. And I was like, yeah, I feel for you. So we'll get to that. But yeah, so that's active inventory. Now let's look at demand. So we've got supply. We know that's not amazing nationally, but let's look at demand and see how that's doing because that's in the toilet. I mean, folks, make no mistake, people are not out in droves trying to find houses. Like right now, this is a little bit of a pain right here. I mean, look at this. We're actually down 0.3% in pending sales. So a pending sale is when a home goes into contract. So you've got 0.3% basically flat, but we are down slightly. You only had 75,000 people going into contract on homes. That's it. It's not good. It's frozen. Not a lot of people putting their homes on the market and still not a lot of people buying, despite mortgage rates, kind of, they're in the low sixes, right? We'll get to that in a minute, like 6.3, 6.4%. People are like, no, thanks. And a lot of reasons could be because home prices are still really high in a lot of areas. Taxes are high. Don't even get me started on property taxes. But property taxes are high. Insurance is high. There's a lot of doubt in the economy, right? So people are like, nah, I'm going to sit on the sidelines still. For the most part, there are people buying homes. As a realtor, I do sell homes still. I still help people buy homes. But overall, demand is not amazing. In fact, homes sold, how many homes closed? Look at this, 0.8% up. So you've got a little more growth in listings. You've got a slight little smidge growth in people actually buying homes nationally, but it's not like people are running into the housing market to buy a house. It's not, there's not a lot of FOMO there. At least it doesn't seem like it, which is probably a good thing, right? All right, so that is demand for the most part. That's how we look at demand. Now let's look at days on market, because that's going to tell us how fast homes are moving. So this is still up year over year about 5.75 days, meaning homes are sitting on the market about 6 days longer than they were this time last year. Is that a lot? Not really. So homes, there are homes that are getting snatched quickly. I get responses from you all the time, comments that say, hey, homes are sitting, homes are going quick at over asking. Not happening everywhere, but there are a lot of areas where homes are sitting. So it depends where you live again, but homes are not rotting forever on the market, but they're not moving as fast as they were the previous years. So like last year, for instance, we were selling homes in 42.75 days, basically 43 days. The year before that, 38 days. The year before that, 35 days was the median time on market for this time of year. So homes are sitting a little longer. Now, this is everybody's favorite exercise. Let's look at prices. Now, this is median sale price. So they look at all the homes that sold. Then they look at the house in the middle and say, which house sold in the middle? That's median. It's not average. This is probably the part that angers most people. And it's frustrating. I understand that. $394,000. It's up 2% year over year. It hasn't fallen underneath 2024 at all this year. Median sale price has not fallen underneath 2024 at all this year. And what does that mean? It means that when you think about, if you have home prices falling in your market, wherever you are, and you're like, hey, home prices are falling, it means there are homes somewhere where they're not falling and they're still going up. Like I showed you Cleveland. We're looking at some other metros today that I have a feeling are still going up. But it means that for every house out there, basically, that seems like the price is falling through the floor, there's another one where prices are going higher. And so the median sale price now is just refuses to move. It just does. And a lot of that could be because we're not selling many inexpensive homes anymore, because there are none on the market hardly that people want in most metros. And so a lot of the homes that are selling are more expensive, and those end up basically, carrying the median sale price up. So that median sale price is a little distorted. It can kind of confuse people and make them think either something's going one direction down or up, but it is the gauge we have to use. So I just use it as kind of like a broad gauge, like, all right, where's the direction? Well, the direction is right now still elevated. So that is median sale price. Now let's look at the listing price. So this is how much people are listing homes for. And it is elevated too compared to last year, up 3%, $391,000. The odd thing is this is lower than the actual median sale price. So it could be that people are now starting to list homes more realistically, maybe, and then we'll start to see that trickle through to the actual prices, the closed prices, right? It could be. That's my guess based on this data. Again, it really depends on the mix of the houses out there, right? So let me see if I got everything. I got that. Days on market. Yep. Price. We did that. All right. Now let's get to some comments. Then we'll do the metros. We'll jump right into it. And if you have another question about real estate or the housing market, we can look at that too. Oh, super chat. What's up, Charles? You did this again, man. That's really nice of you. What is keeping the Midwest Michigan from being affected by the rest of the national housing downturn? I just don't get it. Yeah, we'll look at that. I'm going to star this. That's a great question. Thank you seriously, thank you for the super chat. That means a lot. I will star this and save it. And then we will look at that, because we can look at a map and I can kind of give you an idea. But that's a great question. What's up, Blake? Looking into Fort Wayne, Indiana at the moment, primarily 46808. Many thanks and cheers. You're welcome. I'll definitely do that for you. What's up, Barry? Good morning from the Northeast Ohio area. Now, Barry, you may know I have an all Ohio channel, Ohio Housing Nerd. So check that one out because probably tomorrow, I'm thinking it'll be tomorrow, I'm going to do a live on the Ohio channel, and that's just for Ohioans, right? I mean, it's not just for Ohioans. I mean, if you're curious about Ohio, you could jump on it, but it's just dissecting Ohio housing market data. But thank you for chiming in and checking in from Northeast Ohio. Evil Overlord, how are you? Pirate Justin, what's up? Houston, Texas. Oh, we can look at Houston. We got to look at Houston. Portage County, Ohio. Okay, we'll do that one. I see price cuts, some disappearing, some turned back on the market. Pricing is way too high. 4, 4, 3, 2, 1. That's the thing. We are seeing a lot of price cuts. We are. Like, a lot of homes have price cuts. I think 25% of the market right now has a price cut, approximately. Some areas of Ohio, I've seen 40%. Some I've seen 15%. But it looks like what's happening is still with the price cut, the end sales price is still higher than last year. At least that's what I'm seeing. But yeah, I'll get that one for you. Liked before you started. Cool. I appreciate it. Yeah, just hit the like button. Don't be a freeloader. Be reals. I got to think of Cypress Hill when I see that name. Wages also higher overall in the Midwest, buoyed by Illinois Canadian trade. Never thought of that. Could be. AA1AA 92337 California. All right, we'll do that one too. Great. The average age of a home buyer right now in America is 59.3 years old. I thought it was like 40. Or is that the first time home buyer? I thought it was 40, that stat I just read. I mean, I help a lot of people buy and sell homes, and it's a mix. Like this year, I've helped first-time home buyers that are underneath 40. I've helped first-time home buyers that are over 40. I've helped people sell homes that are in all demographics as far as age goes. Investors I've helped. I've kind of helped, like, it's just a smattering. But I understand what you're saying. Sorry for rambling. Let's see. Winter is coming. Man, in Ohio, it's here, it feels like. Last couple of days were cold. But I'm in the data dungeon today because we're looking at charts. Otherwise, I'd like to do this outside and brave the cold. They aren't going down too far. Wages will eventually catch up, just like the 20s, 70s, 90s, and 08. A lot of people have this theory. I think what Forerunners is saying is that the housing market, the prices overall will, correct me if I'm wrong, Forerunners, but go sideways, maybe a little down, maybe a little up, kind of like we're seeing. And they'll do that, grind sideways for a while. Could be a decade, maybe not that long. But a lot of people are saying 5 years, right? I even heard some folks just recently on YouTube talk about this, that we could just be in a slow grind sideways, and then wages catch up to home prices, and then homes become more affordable, and like the housing market gets more unlocked. I think that's what you're saying. Which makes Midwest more robust than the rest of the boom bust market. Okay, you're talking about the Midwest. Yeah, we can talk about that more later. I'm just looking for other people. Michael Wyman, good morning to you, sir. Thanks for joining. Juan Z, Fresno, California. I paused looking for a home. Yeah, I knew you were looking for a home, Juan. I remember we looked at one that you had went and took a look at. I've noticed rental pricing on single-family home types are dropping in the area I want to buy. Doesn't entice me to purchase if I mean I can save money on monthly expenses. Right. Um, yeah. So if you pause now, nothing wrong with that. Taking a breath and going, all right, let me reevaluate. Let me keep looking here. I'm looking just for other people that have chimed in. What is your real estate investment strategy for your future or retirement? For your future or retirement? You talking to me, German? Well, uh, well, I guess my future is retirement, right? A lot of people think I'm like 30. I guess, compliments. That makes me feel good because when I was 18, I looked like I was 10. I don't think I started growing facial hair till I was like 25, it seems like. But I'm 48. So I'm not as young as a lot of people think I am. But it's for retirement, really, in our future. I mean, I guess both. That's why I invest in real estate, as if you're asking me. Um, I can tell you one thing. It's not because I want, it's not because I need the money right now. Well, that's not how I should say it. It's not because they're cash flowing a ton right now. It's not like I'm going on crazy trips or buying exotic cars with the cash flow, because right now it's literally like nearly a lot of months a break even strategy because I'm putting so much into the properties because they're old. So there's a lot of deferred maintenance. Eventually that'll turn around, right? As I keep improving them. At 40 years old, the bank owns the house. At 40 years old, the bank owns the house. Yeah, I don't know what that means. Maybe he's talking to somebody else. Sorry. I just like hearing what you guys have to say. Yeah, so there you go. Yeah, that's my strategy. I'm just doing it for the long term. In the my vision is 20 years from now, 15 years from now, I'll still be talking to y'all on YouTube. But hopefully, at that point, I'm kind of maybe traveling around a little bit, have some rentals, you know, probably some YouTube type income, that type of thing, and just see if I can, you know, live an easy life. But it'll, you need a lot of money to do that. And I'm not sure that's going to happen. I'll probably work for the rest of my life anyway. All right, let's get to some of these zip codes. Actually, you know what we should do that I forgot is to look at mortgage rates. I did not do that. I go to Mortgage News Daily often. That's how I do it anyway. All right, so Mortgage News Daily. Yeah, rates dropped yesterday. So the 30-year right now, 30-year fixed, 6.29% is what they're saying. That's down a half or 0.05%. So 5 basis points. But I noticed the 10-year was up again this morning. So, they may come back up. Rates are kind of just range bound, it feels like. And the same with the 10-year treasury. It feels like they just don't want to move around too much. So, I mean, honestly, like this rate is not bad. Like I'm not sure that rates need to come down, but that's my opinion. Probably different than a lot of other realtors. But I don't think lower rates is probably the answer we need in the housing market. We certainly don't need a 50-year loan or 50-year mortgage, right? That's what we don't need. We do not need a 50-year mortgage. Although I'll save that for another video, the meat of that. Although there are situations where I think a 50-year mortgage could make sense. I was talking to a buddy last night. Shout out to Papa Giorgio, a buddy of mine that I hang out with sometimes. And he mentioned, we kind of got into discussion about a 50-year mortgage. And he was like, we had like a healthy debate and we discovered there may be a reason why you would want a 50-year mortgage. But I'll save that for tomorrow's live. I may do a live tomorrow or Saturday or maybe Monday. I'm not sure. But I'm going to talk about why the 50-year mortgage could actually make sense to some people. All right. Now let's get to the metros. All right. So let's go back to your areas you want. If you have an area you want me to review, let's take a look at it. All right. We're going to start with Charles because he was nice enough to do a super chat. So I'm going to go to the Resi Club terminal and we're going to talk about why the Midwest. So if you have a question like this, it's not about a specific market. It's more like, hey, why is the Midwest, Michigan, why is it not seeing the housing market downturn like the rest of the country? Well, if we look at, well, first, let's look at prices. And this is not free. This map, access to this map, I have to pay for. But the charts that I was showing you earlier, those are free. But this is from Resi Club. And what I'm going to do is look. So what Charles, I think, is referring to is the fact that the blue states here, all these blue states, are up year over year in home prices. Let me see if I can make this bigger. It's already large. Yeah, it's hard to see on the screen, I imagine. But so like Wyoming is up 4.6% in home prices year over year. Ohio up 3.6%. Indiana up 3.2%. Michigan, where Charles is, up 3% year over year. So Charles is asking, why is this area here up? But then you see some other areas like Florida down, Georgia down, Alabama flat, I guess, Louisiana down, Texas is down, Arizona down, Colorado down, California is down in home prices. A lot of the West, right, and the Southwest and Southeast. That's where all the pain is. Northeast, Midwest, North is where all the prices are still going up for them. A lot of areas prices are still going up. Although, again, it depends. You'll see that as we dive into these metros, how they can vary in a zip code even compared to another zip code, obviously. So the reason why, in my opinion, you're seeing this, a lot of other YouTubers, and I think Lance Lambert coined this first, was bifurcation, which is kind of a goofy word to use all the time, but it is what it is. So the market's bifurcated because there's areas that are different than other areas in a drastic way. This is why I think it's happening. So, well, let me go to this first. So when you look at year over year inventory, the number of homes for sale, every state, pretty much every state has more inventory than they did last year. And that's a good thing if you want prices to come down. But check this out. Look at the inventory versus 2019. And this is where you see the bifurcation really jump at you. Like Texas, you've got 31% more homes for sale than you did in 2019. And if I click on this chart and look at raw numbers, look at this. This isn't an algorithm. This isn't a hypothesis. These are just numbers pulled, like raw numbers for inventory. So they have 134,000 homes on the market in Texas right now. Back in October of 2019, they had 102,000 homes on the market. So they've got another 32,000 homes more than they had pre-COVID. And what's really crazy is if you go back in time to 2016, they actually have more homes on the market now than they've had really in the last decade. A lot of that's probably new construction. In fact, one of the things that I'm seeing in Texas that I'm not seeing in a lot of other areas is that inventory was rising before COVID. And a lot of markets, inventory was falling, and I'll show you that today. But it's like they just have a ton of homes for sale. So when you take a step back and look at the markets that are brown, those are down. Green are up with inventory compared to pre-COVID. And like Florida, up 23%. Arizona, up 37%. But here's what's crazy. Look at this. Michigan, where Charles is, down 38, nearly 39% in the number of homes for sale. So if we look at this, it looks way different, this chart. Look at this. He's got 25,000 homes on the market right now in the state. In 2019, you had 41,000. In 2016, you had 45,000. So remember how Texas, the inventory was going up, right? Before COVID, you could see it. It was going up, and now it's exploded. Well, in Michigan, the opposite's happened. Look at the inventory, how it's fallen, right? They had 45,000 listings in 2016. Well, they had 42,000 in 2018. Then they had even fewer in 2019 before COVID, and COVID just made it much worse. Why would that be? One of the reasons is new construction. In Michigan, regardless if there are a lot of housing developments based on Michigan historical standards, overall, there's not near as many new homes being built or were being built in the last 10 years. Supply takes a long time to ramp up. So there just weren't new homes, in my opinion, is why you're seeing this. And just overall inventory trends, right? So a lot of homes on the market in Texas and in Michigan, not a lot of homes at all. So then let's go to an area like, look at New Jersey, down 56% in the number of homes for sale. 56%. That's not a demographic narrative. To tell you that this is based on demographics would be lying to you. It's based on not enough homes for sale to support the tepid demand we have. Look at New York, down 40% since COVID. Pennsylvania down 37%. So that's what's happening, Charles. Anyway, thanks for that question. I hope that answered it. It just comes down to inventory, man. Inventory. So it's like, it's boring. It's like, well, what other exciting reason could there be? There really isn't. It's really, in my opinion, it's really inventory is just crushing the markets either way, right? Either it's prices are going down because there's too much, or prices are going up because there's not enough. And again, though, it's very hyper local too. And we'll see that today. All right. Thanks, Charles. Thanks for the super chat again. Thanks for the question. All right. Let me get to the first one that somebody had. Looking at Fort Wayne, Indiana, 46808. Okay. Well, you gave me a zip code, so I'm going to stay with Resi Club. Now, different websites use different data. This is using realtor.com data, this map for inventory, and it's using Zillow data for prices. Different than Redfin. Redfin's using median sale price. So that's not that important, really, when it comes to it. It's just the little nuance. So I want you to be clear on that. So here's the zip code, 46808. So I always start with inventory. So let's look at inventory year over year. You're up 57% in the number of homes for sale. 57%. That's a lot. And that's good. That's good growth. Let's look at how many you have. Right now, you got in that zip code 44 homes on the market. Well, this is based on October 1, 2025. So this isn't weekly data on these maps. This is monthly data. The charts I was showing you are weekly data, but they don't have zip code level analysis. It's only county and metro. Confused yet? Don't be. I'll walk you through all of it. 55 homes you had in 2018. In 2019, you had 42 homes. So you have more homes on the market than you did pre-COVID. If we click this, inventory versus 2019, you've got 4.8% more homes on the market. That's good. That's like that delineation. And here's what's interesting. This is in the Midwest, right? Indiana, Midwest, I would say. And so to Charles's question earlier, why is the Midwest so resilient? The Northeast so resilient? Well, inventory, but not everywhere is the same. So Fort Wayne, you've got more homes than you did 2019. Now let's look at prices and see what's happening. Home prices year over year, up 1.6%. And so like this is this, I think it's psychological with buyers and sellers, but look, I mean, it's hard to even tell you how crazy this is. But back in 2021, home prices were going up 20% year over year. 20%, 19%, 15%. That's not normal. That's not normal whatsoever. And And then the home price growth stalled and has now come down to 1.6%. So last October or September, the end of September rather, in 2024, you were up 7% year over year. The year before that, you were up 8%. The year before that, you were up 11%. The year before that, you're up 20%. You see what I mean? Your price growth is slowing. And that's good if you want lower prices because they have to decelerate. That growth has to decelerate. They haven't come down year over year, but they're not growing at 19% year over year. Now, if we look what's happened since, and this tells us a lot, what's happened since March of 2020? Oh, this is not good. Since 2020, home prices in Fort Wayne, Indiana, in that zip code, unbelievable, up 66%. Home prices up 66% since March of 2020. Now, let's look at since 2022, which means, all right, we just go back a few years, right? 17.5%. So in 3 years, your home prices have gone up 17.5%, but from 2020 to 2025, they've gone up, 68%, I think it was, or 66%, meaning, what's that? Nearly 50%. Am I looking at that right? 50. Yeah. Nearly 50% of the home price growth that you've seen since 2020 came from 2020 to basically mid 2022. So you got like a decade of home price appreciation in like two and a half years, or like 2 years. I mean, that's what really, wrecked us. I mean, people think prices have gone parabolic for 5 years now. In most markets, it really happened for 2 years. So if I look at the typical value of a home, now typical value is not median. How they do this is the 35th to 65th percentile. So they're taking out all the low end homes and all the top end homes. The middle is what they're using. Like the houses that are priced in that middle range, which I kind of like that method better than median, but let me know what you think. So your typical home value there in Fort Wayne in that zip code, $165,574. Now, what I mean when I was talking about how home prices just shot up in 2 years, look at this. Like September 30th, your homes there were $103,000 for that middle priced house, right? The typical value. And you could see how it went up quickly. I mean, it went up $20,000 in 1 year, home prices there. Now, if your homes are $1 million, not a big deal. Your homes are $100,000, 20 grand is a lot. Then it went up, 15 grand to 140. Then it went up 11 grand to 151. Then it went up another 11 grand. But now it's gone up only 3 grand. So it's like that growth is slowing is my point. And I just like to show those trends to kind of give you a perspective. So the more the story is, you do have more homes than you did before COVID. That's good. Home inventory is growing. That's a good thing too if you're looking to buy anyway. So you have more choices. And if you continue to see that inventory grow, Blake, you'll probably see more home price decline. I mean, you could actually see them start to fall. Could happen. Anyway, that's what's happening in 46808, Fort Wayne, Indiana. Thank you. Thank you for suggesting that, because we don't always look at Indiana. All right. Who's next? Ooh. I got a super chat. Do you analyze markets using Reventure app? As a Florida 32084 seller, I need a reliable data source. Thanks, and OH. IO. Thank you, Denise, for the super chat. It means a lot. Seriously. It means a ton. You have no idea. And I'll need a lot more of those, I guess, moving forward in the future if I plan to do this when I'm 60 years old, full time. All right. So your question on Reventure. I don't use the Reventure app mainly because I think for like $40 a month, you get one zip code. On the Resi Club terminal, you get for, I think it's $500 a year, you get the entire US. Plus you get insight, or plus you get access to all of Lance Lambert's articles. So all of his research articles that he does, you get access to that. I think Resi Club is by far the best real estate data source or data aggregator. And I also think his insights are very normal, or very middle of the road, meaning he's not a bull and he's not a bear. The guy that owns Resi Club, Lance Lambert, Cincinnati guy, used to work for Fortune magazine. But if you ever read his articles, he's never like, hey, the real estate's just going to go up. Hey, real estate's crashing. That's the other reason why I would never buy Reventures app, because the guy behind it loves prices to go down, even when they're not. And so I don't put a lot of stock in that. He also has like an algorithm he uses for like forecasting overvaluations instead of just using the data. However, I think Reventure, I'm pretty sure they use the same raw data as Resi Club. I think he uses Zillow data. So let's look at your zip code. 32084. You're a seller. Okay, and you're looking to sell in the spring? Let me know. 32084. So we'll look at inventory first. Now, the best way to get the data you really need, though, Denise, is to go to a local realtor or use Zillow. You could use Zillow, or go to a local realtor and have them pull MLS data. The same data I'm pulling now, have them pull it for the exact subdivision you live in or school system. Zip code's fine, but zip code, depending on what street you live on, it could be way different, or subdivision. So that's the best way to get the data. You can use Zillow, but you got to track it like every day yourself. All right, but let's look at inventory. Year over year, 20% down. What? Holy cow. Is that right? Yeah, I've checked my zip code. Check your zip code, 32084. Oh my goodness. Okay, so you have 20% fewer homes on the market than you did last year. I mean, surprise, right? Big surprise. I didn't expect this. And we saw that Florida overall is up with inventory, but in this zip code, nah, you're down. Now, you may not have a ton of homes on the market. How many homes do you have? Oh, you do. You got 370 homes. So as a seller, this is good news, right? Because you've got less competition out there versus last year. It just depends on when you're going to sell. Let me look and see if you said when you're going to sell. If it's now or what? Denise. Spring or before. Okay. Okay, cool. Yeah, got it. Now, so right now you have fewer homes than you had last year for sale. I mean, that's surprising. But let's look since 2019. How are you? Down 2%. That's crazy. I'm really shocked. So you have fewer homes versus 2019. You have fewer homes versus last year. That just means fewer competitors for you on the sale end. Now, you obviously want to work with a local professional there, or, you can do it yourself. You don't need a realtor, but you got to price your home probably still logically. Like the days of, pricing at 10% over what you think you should and still getting multiple offers over asking, those days are probably gone, right? So price it competitively or in a compelling way if you want to sell it quick, so that people look at the listing online, because price is what moves properties, and they look at the price and go, that one looks like maybe I'd like to take a look at that. That price seems pretty good. You don't have to lowball it, but if you overshoot your skis from the jump, you'll suffer big time in most markets, because homes will just linger. So you're down 2% since 2019. You're down year over year. Can't believe it. I'm just going to double check this again to make sure that I'm looking at the right thing. Yeah, I am down 20%. Can't believe it. And then if I go back to inventory count, I mean, look at during COVID. You only had 131 homes on the market at one point. Right before COVID, you had 378. Yeah, you're definitely dropping in inventory. I don't know what's going on there. Maybe homes, it's possible that enough people listed homes at one point and they were discounted enough that people bought them. And now not a lot of people are listing their home anymore. Let's look at prices. So home prices down 2.9, basically 3% year over year. And they've been down for this entire year effectively. Going into last year, they were down. So you've had decline in home prices year over year for the past year and a half. And look before that. Look at this is ridiculous. In 2022, in May, home prices that month were up 32% year over year. 32%. Wow. So let's look since 2020. What have you done? 40. So you're still up. Even though your prices have been declining this in the last year and a half, you're still up 40, nearly 50% since 2020 in home values. But let's look since 2022. Yeah. Wow. So you're down since 2022, you're down 6%. But since 2020, you're up basically 50%. What does that mean? Well, if we go to the typical home value, it's probably going to show us that prices peaked right here around August 2022 or so, right? Is when home prices peaked at $392,000. And then they fell quickly. And ever since then, they've been falling. So I don't know when you bought your home or how much equity, you don't have to share that with us, but that's kind of the price trend. It looks like it's continued to fall. Now, the question is, will it go back up? Will that home price growth reaccelerate again if inventory continues to fall? It could, because inventory is the name of the game. But right now, prices are still falling. See, a lot of people don't know that we had our peak in a lot of markets back in 2022, and since then, and where the markets where we're seeing a lot more inventory hit the street, home prices have been declining since then. So in a way, we've kind of had a decline in some markets without the national media really understanding it or talking about it. Anyway, that's what's happening there. In 32084. And are you from Ohio originally, or are you just a Buckeye fan? Either way, I appreciate the local shout out, and definitely appreciate the super chat and suggesting that zip code, because that was fun to look at. Really interesting with the inventory. You surprised the housing nerd. So thank you. All right, let's look at somebody else. Blake, I got this one. Pirate Justin, happy Thirsty Thursday from Houston, Texas. All right, well, Justin, do you want me to look at your zip code? I don't know if you do or not. Give me your zip code if you want me to look at it, but you chimed in earlier. Portage County, Ohio. Now let's go back to, let me use the Redfin data here for this and see if we'll use this chart instead and look at county, because you said county level, Portage County. Portage County, Ohio. Do this. All right, so let's start with, I'm going to start with active inventory of homes for sale. Evil overlord. Active inventory, 343 units. That's up 25%. 25% year over year. Now, I can't show you going back to 2019, but I changed my mind. I'm going to go back to this map because we can then look at since 2019. Portage County, Ohio. Active inventory, according to Realtor.com data, you're up 16%. So you've got 16% more homes for sale in that county than you did last year. Active inventory versus 2019, down 47%. Wow. You just have fewer homes than you did in 2019. Means just not enough inventory yet, probably. But the active inventory count, you got 211 homes on the market in the county. And that has been growing. You can see that. It has been growing. So it's not like, you're not adding inventory, but it's just not enough. I mean, look back during COVID, you had like 82 listings. And if you remember, if you're watching the live earlier, when we looked at Texas, you can see how it's different than in Ohio here, where we were losing listings before COVID. You were at 509 listings at one point in the county back in 2016. And then it fell and fell and fell, and COVID made it a lot worse. And you really haven't really recovered since then. I mean, a little bit, but not where you need it to be. You just got to have more homes on the market. And in Portage County, I don't know if they're building any new homes, but overall in Ohio and the nation, new starts are horrible. I mean, housing starts right now are in the dungeon, in the low ends of the dungeon. And builders are just not starting homes like they were. And they're definitely, at least I'm not seeing the numbers come through in Ohio where they're starting new builds. So it's like, if you're not building new homes, I guess there's really not, I mean, in homes in Ohio are old. How do you add inventory? Well, you need people leaving the county, I guess, or you got to have people who maybe have second homes in the county selling. But yeah, I mean, you could be in this inventory situation for a while. You could be. Unless something miraculous happens with homes for sale. Year over year price. How are you doing on prices? You're up 4.6%. Okay, good. So at least you're not seeing declining price. Well, if you're a buyer, that's not good, I guess. But if you're a seller, it's good news. So I don't know what you're doing, but the home price growth is still there. Nearly 5% growth. All right, since 2020, what have you done in prices? Up 48%, right? And since 2022, okay, up 14%. So again, you got a 30% growth in 2 years, basically from 2020 to 2021, or I'm sorry, 2020 to 2022. In 2 years, you got about 30% growth in home prices because you're up 48% since 2020. But home prices, it looks like, are still climbing there. Typical home value, what do you got? $270,000. It's an all-time high there. Sorry, Justin. Not Justin. Evil overlord. I don't know why I said Justin. He was the other guy. $270,000. All-time high in Portage County, Ohio. Man. I don't know if that's going to change anytime soon because homes are relatively inexpensive there compared to the rest of the U.S. So unless you get a bunch more inventory, man, I don't know. I think you're going to struggle with home prices, coming down to some type of normal level. Barry Zimmerman, you're next. I see price cuts, some disappearing, some turn up back on the market. Pricing is way too high. 44321. Which is where? Oh, it's in Ohio. My fault. 44321. Active inventory year over year, 46% up. Active inventory versus 2019, down 32%. Very similar trend, right? Up year over year, adding inventory, down since COVID still. Inventory count, you got 27 homes in that zip code, not a ton, but at least it's not, nothing, I guess. But you're just not adding inventory like you should, right? Or like you need to get prices down. 27 homes back during COVID, would you have? Or a couple times. Look at this. You had 6 homes at one point. Goodness gracious. What's this? 3 homes on the market in February 2023. Wow. All right. Now let's look at prices. How are they doing? Home prices up 3.4%, like 2%, 3% is like normal home price growth historically in most of the US. And then some areas are different, obviously lower, higher, but 3%, 2%, that's typical. So the good news is you're not exploding anymore. The bad news is prices are not declining. And now let's look at typical home value. Wow, homes are expensive. $385,000. Is that an all-time high? Yes, all-time high. Man. What did my title say? Why are prices still too high? Inventory. It is. It's a brutal truth. And so I hope people, when they watch this, they get some type of understanding that it's not every market isn't like this, but a lot of markets are. All-time high in home prices there. Jeez. What have you done since 2020 in home prices? Up 41.5%. Okay, that's not insane. It's not 60% at least. And since 2022, you're only up 10%, meaning 30% happened in just a couple years, as it did in a lot of other areas. So it doesn't look like home prices are declining there yet. Inventory is still struggling. You're just going to have more homes for sale in order to see some more decline. All right. You are seeing price cuts. Yeah, I imagine you are. And a lot of people will relist a home after taking it off the market if they don't get the offer they want. And then they relist it. It hits the market as a new listing. And it comes off as inventory. Then it's added as inventory and a new listing. But a lot of times people will relist a home thinking it's the realtor or the pictures are bad. I got news for you. If your house is overpriced, you can take any picture you want. People won't come and see it unless the picture is of a lower price. People will not come and see it. That's a normal market where if you overprice your home, you will be punished. So people obviously haven't cut their prices enough there to get them to sell those homes. But the ones that are selling, Barry, are selling over what they would have last year. All bet, just 3%. So that's what's going on there. All right. California time. Look at this. California IA 92337. Where's that? Let's look. I like looking at these different markets. 92337. Why do you do this, Resi Club? Let's see. All right, here we go. And where is that exactly? 92337. There's Catalina, right? So you're east of LA, right? I'm just kind of looking. Is that Temecula or something like that? Maybe not Temecula. Probably Riverside. That's just a guess. 92337. What's going on? Inventory down 7.5% year over year. Unfortunately, I didn't say this earlier, but unfortunately, I am seeing this in some markets. I have been kind of poking around at areas where inventory exploded over the past year, but now it's falling year over year. Goodness gracious. Active inventory is down 58%. 58%. I got the right zip code, right? Yeah. Since 2020. You have nearly 60% fewer homes on the market since 2020. That's not going to help your pricing probably. Although, who knows, right? So let's look at prices. Oh, prices down 3% year over year. They've been down the last few months year over year. So you are down 3% year over year. Good news if you're looking to buy anyway. And it's probably just better. It's probably just better for the market overall to be like that. Home prices up 43% since 2020. And since 2022, they're only up 0.4%. Wow. That means you literally got all of your price growth from 2020 to 2022. So like nearly all of it came in those 2 years. And then since then, since mid 2022, it hasn't really been anything to write home about. Let's look at the typical home value. Typical home value, $604,000, which is cheap for that area, I think. Well, not cheap, but a lot of homes are over $1 million, aren't they? But you've come down. Look, you can see 625 grand here, and now you're down to 604. So that's definitely what they call that a correction, or just a decline in prices. It is happening. I'm curious about the inventory count, though. I didn't do that. Let me look at the inventory count. Oh, you only have 28 homes on the market there. Is it kind of out in the desert? 25 homes on the market now. So look at this. This is probably why prices declined since 2022, or they've been flat since 2022. Is you had a bunch of homes here in 2022, and then that caused prices to come down and stay lower, I think, right? If I go back and look at home values, yeah, you could see it right here, right? In August of 2022, it started to come down. It did go back up. But since then, it has been falling. But with only 25 homes on the market, I mean, there's just not a lot to choose from. So probably like 1 or 2 sales can really move the needle. But I wouldn't expect prices to crater there just because of the fact you don't have a ton of homes for sale. That's what I'm saying. But I used to live in Irvine, California, so I know that area somewhat. All right. Who else wants a market to look at? What do I got? Who has one? Nice. Cassandra and Anthony Palacios. Did I say that right? Palacios. I don't know if I said that right. Maybe, hopefully I did. 37122, Mount Juliet, Tennessee. Thinking of renting for 2 years and then buying. Okay, 37122. Let's look at it. Nothing wrong with renting at all. Don't let anybody tell you that you're, that you're like a fool for renting. Because that's crazy. That'd be like me saying you got to buy now, or don't buy because the market's toxic. It's like, well, I don't know your situation. I'm not you. Maybe it is a good time for you to buy. Maybe it's not. Maybe it's a good time to rent. Maybe it's not. But that's what we're going to try to figure out, or I'll help you with. But I can't make that decision for you. 37122. And let me just zoom out here. So you're like right, kind of the middle of the state, kind of in Tennessee. That's cool. I like Tennessee. Got some relatives outside of Nashville. Active inventory year over year in that zip code, up 24%. But look back in 2022, active inventory was up 500%. There can't be a lot of homes there for sale. That's probably why. Active inventory versus 2019, down 7%. So you still have fewer homes than you did during COVID, or before COVID, but you do have 24% more homes, or nearly 25% compared to last year. Now let's look at prices. You know what? Let me look at inventory count. Oh, you do have a good amount of supply. 296 homes on the market. I mean, look during COVID, 66. Goodness. And then you saw that spike in 2022. It went up quick, right? I mean, you went from 68 homes in 1 year. Look at this. Wow. You went up from 66 homes to 219 homes in 1 year. That's a lot. That's a big growth. I mean, that's a flood of inventory. If that trend had continued, that's when you see like a home price crash. But it didn't, right? It kind of went, well, although now it is going back up. Let's look at prices and see what they've done. Prices, how have prices done? 0.9% up. That's it. That's a heck of a lot better than 30% up year over year back during COVID. Goodness, right? That was no good for anybody. But look at that growth, how it just stalled. If I maybe this will help if I do this. Yeah, that'll help. So yeah, like during, here's 2021, you were up 20%. During 2022, you were up 23% year over year, which was unsustainable, right? And then that growth fell and you were down like a little bit, I guess, 1 month. But overall, it's kind of just meandered sideways, although it hasn't crashed. Let's look at since COVID prices and see what they've done. Yeah, you're up 52% since pre-COVID, or right when COVID started, right? March of 2020. Let's look at home prices since 2022. Up 1%, that's it. So all these markets, or a lot of them, are painting the same picture, right? 52% growth in home prices since 2020. But since 2022, you're only up 1%. That means that in the last few years, home prices have just kind of gone sideways. And again, a lot of economists or housing, the people that are sensible about the housing market anyway, predict, which is a logical prediction, that we could just go like this for a while, where homes don't really grow in value that much. They don't crash. They just kind of go sideways. Eventually, wages catch up. Local wages catch up, or they get better. Maybe interest rates come down, maybe, and things get more affordable. But yeah, the prices haven't crashed, but they certainly are not skyrocketing anymore. Let's look at the value and see what we see. 300, you wish. $568,000. Wow. That's an expensive market. Goodness. Let me go back to, let me look at right before COVID, right at COVID. There we go. I just use that. So right now, $568,000. And I think this really illustrates it. Look at that flat. It's just flat, the values, right? Like not going up that much, not going down that much. Like back in September 30th, the end of September 2023, home values 553, then 563, now 568. So they are going up, but it's not exploding higher, but it's not crashing either. So you want to rent and then maybe buy. Let me see if they have rent in here. They may. Yeah, they do. Here's rent. You're going to rent a house or an apartment. So rent, $2,162. That is kind. Let me see if it's flat. Let me see if they can tell me. Yeah. So rent is up 1.2% there year over year, right? In the last few months, it hasn't grown that much, although there were months last year where it was, or earlier this year and last year where it was growing. But if I just look at the rent overall, the typical rent there, $2,162. Last year, it was $2,136. And the year before that, $2,052. So rent has grown there. And you said you're renting. That's why I pulled that. But when it comes to buying, you said 2 years. It really comes down to inventory. It really does. Like, you need to watch how many homes are on the market. And why can't I find this? Yeah, here. You need to watch how many homes are on the market. And if they explode upwards, you probably will see further price declines. If they don't explode upwards, they may just go sideways for a while. I have no idea what will happen in 2 years. But waiting or on the sidelines, there's nothing wrong with that. But become an expert in that area, in that zip code. Become an expert. You can certainly work with a local realtor there that can pull that data for you and have them send it to you like once a month, or once a quarter. If you're not going to buy for 2 years, right? Maybe do a quarter for the next year and then start looking at it once a month, and have them go back like a decade. And they can get really granular, like the type of house you want to buy. So don't have them look at just the zip code. Tell them the exact area, or if it's a zip code, that's fine. Tell them that, but then also tell them, hey, I want to know the houses that are like 3-bed, 2-bath, or 4-bed, 2-bath, whatever you're looking for, or a condo. Have them look at the exact type of house that you want to buy. And the price point. Those are important, because if you're looking at $1 million homes and you're buying a $500,000 home, the $1 million homes don't matter. Right? So look at the price point and the type of house in the area. Have them pull the data, go all the way back as far as they can. If they can go back a decade, have them go back a decade, and then have them send it to you, whatever you desire. And they should easily be able to do that for free. There shouldn't be a cost to that. And then you can look at it frequently and notice a trend of what's happening. You'll see it. So that's how I would do it. And then make that decision. It sounds like a nice area, though. I mean, I'm sure it's beautiful there. And thanks for suggesting that. That's great. What in the world? Panadro. Panadro. I don't know how you say your name. I'm sorry. Panadro. Oh, man, I'm horrible. Financial engineering, jury rigging, keeping prices high. I mean, the people that own these homes, man, they're going to sell what they can to get the price they can get. And the buyers are trying to get the best price they can get. So, I mean, if you're one of the buyers out there right now, or if somebody's buying, or if somebody's selling their home and you pay a price, or you sell and get money in the bank, is that financial jury rigging? It could be, but maybe not. Anybody else have one here? I got all the same people in here, which is cool, I guess, but nobody else has one. You're welcome, Denise. You are definitely welcome. Coors Light, what's up? Right. Good call. Coors Light says, Denise, inventory down. You hit the Florida jackpot. Yeah, that's crazy, right? To see inventory down in that area. Down year over year. You wouldn't see that. You would not see that normally. St. Johns County, one of the best in Florida. Cool. Good for you. Pirate Justin. There you go. 77494. Where's that? 77494. Hey. My dog's barking. Not my feet. Okay. Inventory in 77494, which is, well, we should just know where that is. Oh, you're in Texas. That's like outside of Houston, right? Is that the Woodlands? Is that where you are? I think the Woodlands is north, right? I don't know. 77494. Let's look at the inventory, up 57% year over year. inventory versus 2019, down 30% year over year. Now, remember, folks, Texas has more inventory overall than they did in 2019, but it's zip code dependent. In this zip code, down 30%. Down 30% since 2019. Inventory count, what do you got? 489 homes on the market. And right before COVID, you had what? 687. So you definitely have fewer homes than you did pre-COVID. And let's look at prices and see how they did. Home prices year over year, down 1.6%. Prices are dropping there. Since 2020, what have you done? Up 48%. And since 2022, down, up 1% since 2022. So again, all that growth happened literally in just a couple years. All that price growth happened in a couple years. It must be a newer housing market because they don't have a lot of data, is what I assume. Let me look at this value. $493,000. So you peaked at about what, 503, 504,000, around there, and now you're down underneath 500 grand. But look at this run up right here. This is what happened, right? Some 2020, basically prices went straight up from 335 to 403, $70,000 in 1 year. I'm sure you saw it right up close. And then they went up another, what, $80,000? Is that right? Yeah, it is. Another 80,000 in 1 year. And look since then, right? Went from 485 to 487. Then it went up a little bit, but not 80 grand. Now coming down, but it's literally these 2 years just submarined the market with prices. That's what's happening in 77494, Pirate Justin. But prices are starting to decline, but not crashing by any means. So what does that mean? If you're trying to buy in a market like this, people are like, should I wait for the bottom? That's what they probably think, right? Hey, should I wait for the bottom? I mean, you certainly could try. I mean, you could certainly wait for prices that if you think they're going to come down and you're like, oh, I'm just going to wait. Okay. Based on inventory trends, right? You could do that. But you could also just go out and find a home knowing this situation and say, well, I'm not going to pay $493. I'm going to negotiate a deal and find a place for, I don't know, $460. I'm going to go into contract at $460 somewhere in that market. And then you've got $30,000 there where you're like, all right, well, if prices keep declining, life's good. You could also just plan to be in the house for 10 or 15 years. And if you buy it for $93, and if prices decline a few percentage points, it probably won't be the end of the world. But at the same time, you never know if prices are going to fall through the bottom of the bottom of the ocean either. It really depends on inventory, how many homes are hitting the market, and how much demand's out there. And so if inventory continues to rise, right? We are seeing some rise in inventory there. Yeah. I mean, certainly from COVID, right? You've seen more homes on the market. So like in this, like if you were, what I'm trying to get to is if you were buying next year, like next spring or something, you'll know a lot early in the year. Like as we approach February, March, April, you'll start to see listings hit the market because it's the spring selling season. If you go from like 400 listings to like 600 listings in the spring, and then all of a sudden you're at 800 listings, then 1,000 listings, yeah, prices will probably start to come down, and you'll see it reflected in the homes out there. You just will, because that's an explosion of inventory, and people will have to sell at probably a loss, and that could be your gain. So I hope that made sense. Thanks for the suggestion. All right, let's keep going here. What else you got? And we'll do Garland, Texas, 75040. inventory of homes for sale, up 12% year over year. Not that impressive. So it's not like an explosion of inventory year over year, but let's look since 2019. What do you got? Up 51%. So that tells me, yeah, obviously a lot more homes than you had pre-COVID. How many is that? Let's see how many you got. 145 right now. What? Let me just make sure I'm looking at the right thing here. Yeah, up 12%, right, year over year. Okay. And then since 2019, up 51%. And if I look at the count of inventory, how many homes on the market? 145. Last year, you had 129. Year before that, 95, then 66, and 47, and 30. Wow, 30 homes. So you went from 30 homes in October of 2020, and now you've got 145 homes. It's a good amount. That's a good change. And pre-COVID was 96. So you definitely have more homes. I wonder if they're new homes or, they could be new houses. What's happening with prices? Let's see. Wow, look at prices. Down 5.6%. And they've been down all year. They've continued to fall. So the question is, where are prices now? Let's look and find out. Prices. Oops. $279,000. And they've come down. Like the peak was 295, maybe. Be nice if they had the peak listed on here. That'd be cool. I'll have to ask Lance about that. $296,000, but down now to 278, 280. So prices have fallen. You got some relief there. I don't know if it's enough relief for you, but you can definitely see what occurred. And then you can see how prices went straight up. Like from this year, 2021 was 237. Then they went all the way up to $292,000 in that 1 year, 60 grand. Jeez. Then they went sideways. Now they're falling because inventory is growing. Good. If you're a buyer, seeing more homes in the market. I would think you're going to see further price decline because of that inventory explosion. And if I go back, let me just look again at the inventory historically. Yeah, if I go back to 2016, look at that. You had 40 homes on the market. Then 63, 73, 96, now 145. You have more homes than you've had in the last decade for this time of year. Earlier this year, you had 162. That was an all-time high as far as the last decade, going all the way back to 2016. Hard to get inventory data past or earlier than 2016. The National Association of Realtors has locked it up. So it's hard to see what happened in these zip codes when the great financial crisis was going on, which would be great info to look at. But sadly, they don't provide it. 145 listings. So I'd say prices are probably going to keep coming down, right? If inventory keeps going up, that's the trend. What else we got? Anessa, how are you? 07726. 07726. 07726. New Jersey. Hello. Inventory up 13%, 14% year over year in active inventory. How about since 2019? I'm not surprised here in New Jersey. Down 42% since 2019 in inventory for sale. The Northeast is rough. New Jersey may be the roughest state. Maybe Connecticut is, as far as tough markets because of just the number of homes on the market. Active inventory count, you got 107. I mean, you have gained some. Well, no. Yeah. Okay. You've gained a little since October of 2020. But if I go back to October of 2019 pre-COVID, you had 186 homes on the market. Now you got 107. And this is what I'm talking about. Earlier, we looked at this with multiple states and areas. We keep seeing this trend. 203 homes on the market in 2016. Now you've got 107. So your inventory numbers have been falling ever since 2016. Way before COVID, inventory was falling. I've got some kind of weird noise outside my door. So you've just had fewer and fewer homes on the market. That has not, I'm sure, helped prices at all. And it's not just you. I mean, it's not just your zip code. I mean, all of New Jersey is wrecked. I'll show you that in a minute. Let's look at prices. And by the way, I'm not going to tell you it's a demographic story because that's not going to help. We're going to see why the prices are like that or why inventory is like that. You are up 0.8% year over year in home prices. Home price shift since 2020, 52% growth in home prices. Since 2022, what have you done? Only 11%. So not like home prices are skyrocketing there anymore. Thank goodness. I mean, it had to get to a point that it was just unsustainable, right? You can't go up double digits forever unless you're NVIDIA or something. But like you were at $809,000 median home price. Goodness. Homes are expensive in New Jersey. And then you've been falling a little bit. So like you peaked at 809. Now you're down to 800. So there's some relief there in home prices. There doesn't look like there's a whole heck of a lot for sale, I'd imagine. But it's not just you. It's the whole area. Like if I zoom out and look at inventory versus pre-COVID, look at this, folks. You want to know why the market's bifurcated or what the real data shows us? I mean, this is what it is. Remember, green means you have more homes versus 2019. Brown means you have fewer homes versus 2019. I mean, there are only like a handful of zip codes. When I counted this last time, it was like 15 zip codes. So out of 750 zip codes in New Jersey, I think it's about 750 zip codes total. Only like 15 of them have more homes than 2019. That means virtually the entire state is wrecked with inventory being gone from the market. I mean, some of these are really bad. Like this zip code here, what is that one? 08555, down 70% since pre-COVID. Down 78%, this one. So it's not great at all. Now let's look at new listings though, because I haven't been doing this just because of time, but let's look at new listings year over year. I'm sorry, new listings since 2019. So new listings means of somebody putting a home on the market. So if we go back to your zip code, Vanessa, and I look, you're down 16% in the number of people listing homes versus pre-COVID. And if I look at new listing count, you can see in October, you had 52 new listings hit the market. Well, back before COVID, you had 84 hitting the market, 86 hitting the market in a month, which doesn't sound like that much of a difference, but it is when you only have 50 new listings. That means another 30 listings was hitting the market at that point, and that's was causing, or that's part of the reason why you are seeing inventory now only at 107 versus 186. So that's one reason why the market's so tough, is because people just aren't listing their homes like they were back before COVID. And it got so bad, inventory got so bad there that, I mean, look at this. You had 40 listings at one point, 38 listings, just nothing on the market. Now, 107. So the good news is you are gaining some inventory. The bad news is it looks like you have a lot to go, but just that gain in inventory has caused prices to kind of pause for a second. And like we're seeing, they're only up 0.8% 0.8% year over year. Only up 0.8%. So I hope that helped. I hope that helped you, Anessa. Oh, okay. When I did Texas, that's Katy, Texas. Right. Yeah, okay. Yeah, I messed that up. Woodlands is north, right? How much is Resi Club? School Me Money wants to know how much is Resi Club. Yeah, so I think they only have one tier. And so to access this data and all the research articles, I think it's $4.99 a year now. $499 a year. I don't know if he does it monthly or not. But yeah, and you get the whole country though for that. I don't know if he's going to do just zip code level for, somebody just wants one zip code or one state, but the entire package is $4.99 a year, I think. And maybe he may have like an introductory offer or something. I don't know. I just saw a price drop of 100K in my market. Where are you, School Me? Let us know. Let's take a look at it. Let's take a look at it. Okay, I'll show you a couple other markets here that I kind of teed up. This one surprised me. Look at this one. Then this is Redfin data. Again, different provider, but the chart sometimes is nice to look at. Median sale price in Nashville, Tennessee. I picked up this one because I was like, man, Nashville's probably hurting, right? I was thinking they were. But look at home prices, $489,000. It's an all-time record high price in Nashville right now. Not for this time of year, an all-time record price, period, for Nashville, Tennessee. So they were like looking at the crash, and Nashville's like, kick rocks, crash. I'm going to keep going. Unreal, right? Let me look at, this came Nashville. Let's look at Nashville, Tennessee. I want to look at new listings in Nashville. Look at new listings up 5% in the Music City. And now let's look at active listings. Active listings up 10%. They do have more homes for sale than last year. Okay. But prices are just unhinged there. There's another one I wanted to look at, and that is, check this one out. Let's go back to Cleveland, because I started that at the beginning. I've heard recently that Cleveland's crashing, inventory is exploding, prices are falling fast. Let's find out if that's true. New listings are up 7%. So they're adding some new listings to the market, which is good, but let's look at active and see if it's sticking. Look at active listings up a measly 5% year over year. I mean, that's not good at all in Cleveland if you want price to come down. It looks like they added inventory, but then somebody bought it or something happened because now it's coming down. Let's look at median sale price. Median sale price, not crashing, up 7.7% year over year, $250,000. Yeah, there are cities in the U.S. where you can buy a home for in the mid 200,000 range, and they have an NFL team and a pro baseball team and a pro basketball team. They may be the cheapest major sports team city in the country. Maybe Detroit. Could be Detroit. But 250 grand, up 7.7%. Ohio is just continues to go. Higher for longer in Ohio, I guess. And speaking of Ohio, let me show you Cincinnati. The nasty natty. I had somebody ask me for Cincinnati. Cincinnati. Median sale price in Cincinnati, not an all-time high, but elevated, 310,000, up 8% right now, which is hard to imagine, but it is. New listings in Cincinnati up 12%. So they are adding inventory, and it's coming way out of seasonality. So maybe that'll help some home prices in the spring, maybe. Active inventory is up 8%. So they do have more homes for sale, more people listing homes, but prices still haven't decided to come down yet at all. All right, let's look at the next area I had listed, Pittsburgh, PA. Active listings in Pittsburgh up 5%, but that's not a lot. Not when you would expect new listings to explode. New listings up 8%. Those haven't exploded, but you do have more homes being listed. And now median sale price in Pittsburgh up 7% year over year, 248,000. Now the trick is you'll hear people say that 50 of the top 100 metros have falling home prices. Well, that's true because home prices fall every fall and every winter. So month over month, they fall. And you can see these charts every month they fall. I'm sorry, every fall, every winter they fall. But then in the spring and summer, they go back up. That's how the market works, right? The point is, year over year, comparing this year to last year, they're still up. And unfortunately, Pittsburgh is up 7% in home prices. What? Now, let me look at Detroit. Kind of looking all around the Midwest, I guess. Look at Detroit in sale price. 210,000 up nearly 10% year over year. What in the world, right? New listings up 11%, which is good for the future of their housing market. You know, more homes, better prices usually. Active inventory is up 15%, 16%, but people must keep buying homes there. They must, right? Sales are actually down too, down 10%. So it must be just expensive homes they're selling that's keeping the median sale price high. Has to be. Doesn't look like any cheap homes are selling in Detroit. Wow. Okay. What else did I have? Oh, you know, the other one I looked at was Dallas. This one's completely different. Dallas, Texas. Median sale price in Dallas, look at this, down 5% year over year. That chart looks ugly. Now, new listings, what have they done? New listings are down 4% in Dallas. Wow. So fewer people putting their homes on the market in Dallas, Texas. Active listings, man, that's dropping, only up 8% in Dallas. So my guess is that maybe people have bought homes in the last few months, like maybe homes sold picked up. Yeah, I mean, I guess it picked up. Or was it? Yeah, it's up 5%. The number of homes sold earlier this year, up 4%. So maybe people came into the market, purchased the houses that were being discounted heavily, and that caused the median sale price to drop. Is that possible? Maybe. Yeah, but that median sale price looks ugly, and it's going down 5% in Dallas. Wow. What else did I have on my list here? Oh, this one was really interesting. Check this one out. Austin. Look at Austin, Texas. Prices are up 3% year over year in Austin. No, actually, what would they start off with? They started at 440 grand back in the spring. Now they're at 442. They're actually up year to date, meaning home prices in this time of year when you would think they'd be falling the most are higher than they were at the beginning of the year in Austin. Look where they were back in 2022, though. 574. They've come down a lot since the peak. But now I guess maybe they found a floor, like they would call it in a stock market, a support line, right? Like, all right, well, once they get to like 440 grand, buyers are like, well, that's a good price. I'll buy now. Maybe that's what's happening. Let's look at inventory. New listings are flat. Oh, they're up 3%, but not up a lot. Let's look at active listings in Austin. 8.98% up, but that line is falling. So maybe like they already had their explosion of inventory. I mean, this is the explosion they had right here. If you go back, you look at some of these trends. Look at like they had in 2022, they had 4,427 homes on the market in early 2022. And then interest rates went up and people freaked out and were like, we got to sell our home now in a lot of markets, Austin included. And they just loaded on the market. I mean, tons of homes flooding the market. They ran all the way up to 12,000 homes on the market, 12,000 from 4,000, right? That's a big difference. I mean, that is like going to cause pain. And then what happened to prices? Well, if I look at prices now, look what happened to prices. So I hope this helps you. I hope it helps you understand how that dynamic works, right? Steady inventory growth can eventually cause prices to soften or decline, but explosive inventory growth, not like 8% growth, but massive growths of inventory like this. Oh, I'm sorry, like the inventory chart I showed you will cause prices to fall like this, right? Prices peaked there at 574 and they went down fast, and they ended the year at 459. Now they're at 440. So, but they're actually higher now than they were at the beginning of the year, which is so bizarre, but it is what it is, right? Like if I look at 2025, you can see what prices have done, right? They started 440 grand, right? They peaked this year during the year at 451, so not that much higher. And then they came back down to 442, but that 442 is higher than we started at 440 by a couple grand. So maybe this is where people are buying. It's possible. What about homes sold? How's that trended this year? Yeah, there were some people buying, right? In the middle of the year. So hopefully that helps you understand the dynamics of that supply and demand thing. All right, what do we got? Anybody else want to see one? Because I've got more. Okay, I asked about how much Resi Club is. I'd like to know where you are, School Me Money. Like you said, you saw a $100,000 price drop in your market, which, I mean, depending on how expensive the home is, right? If it's a $2 million home, 100 grand is like not that much. But if it's a $500,000 home, 100 grand's a ton. Here's a great question or comment. I predict 2027 housing sales will heat up. They could. The number of sales, yeah. If prices come down enough, they will. And that's honestly what you need for prices to come down even further. You need people buying and selling, because then there's price discovery. Without people buying and selling, there's no price discovery. It's almost like a weird juxtaposition, right? Like you have to have people out there transacting. You have to have buyer demand to actually see prices come down, because otherwise nothing sells. And so prices really can't come down. And that's one of the reasons why prices have remained so sticky, and in a lot of areas have stayed high, because nobody's buying. And for the most part, in a lot of places, nobody's selling either. So you got to have more movement in the market. And speaking of that, did you see, it was a couple days ago, I read on Yahoo that the Bill Pulte was proposing, or somebody was proposing, a portable mortgage where you could move your mortgage current rate. Like if you have a 3% rate, you could move it to the next house. That actually is not a bad, outlandish plan, I don't think. I mean, there's probably ramifications of it, I'm sure. But overall, would that help unlock the market? Yeah, probably would. It would probably free up some affordable inventory or lower price homes. You've got people moving up, right? Somebody has a 3% mortgage now, they can buy a more expensive home for that same 3% rate, which is keeping them locked into their affordable home now. And then they put their affordable home on the market, and somebody who needs an affordable home or a lower priced home can buy it. That would help unlock the market. That was a decent idea. The 50-year mortgage was a stupid idea for the most part. Although, again, I'm going to do a live here coming up where I talk about where it could make sense. Texas is a mess, huh? Got to open the store. Huh, cool. I wonder where you are. What kind of store you got? All right, guys, I'm going to end this thing unless somebody has another one. I don't know if anybody does. I'll give them a couple more minutes. Going once? Going twice? Going 3 times? All right. Well, I hope you learned something about the housing market today. I'm going to keep doing these lives, usually weekly. Join us, like, subscribe to the Housing Nerd. Join me on the Ohio Housing Nerd channel if you want to know what's happening in the Ohio market. And I'm the Housing Nerd, and I am out. OUT, out.